Hi, this is Bill Wood with Disciplined Trading Decisions. Time for the weekend update for the crude oil futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results.
Welcome to the weekend update for Monday, June 19th, 2017. We are covering the crude oil futures market. So let's take a look at the monthly chart. Okay, long range view of crude oil starting back at 1999. By no means am I an Elliott wave expert, but this is what I'm looking at. Wave 1 here, wave 2, a big wave 3, wave 4, and a big extended wave 5. So after 5 waves, what do you look for? You look for a correction, possibly ABC correction. So could this be the A, the B, ABC up to the B? And then I'm looking at a 1. Should be 5 waves in the C wave. So is this a 1? And then A, B, C would be 2. And then 1, 2, 3, 4, 5 would be wave 5 of wave 3. So this is A, B, 1, 2, 3. This would be 4. And then that would lead us to lower prices. Is it possible? Anything's possible. Is it possible that we have the low in for the next decade? Sure, that's possible. My only suggestion is that as you see a trend develop, follow that trend. Is that enough mess on the screen for you? All right, let's get rid of that. Could we get lower prices? I don't know. When it was $147, do you think that they thought that it could come all the way back to this trend line? Probably not, but it did. Not once, but twice, and it's been dancing around this trend line. And once it broke below it again, it just seems like it's rolling over here. So be careful if you're long. On the weekly chart, I drew in this Andrews pitchfork, and you can see that it came up to it once, came to the midline once, came back to it again, didn't reach the midline this time, broke above this upper line of the Andrews pitchfork and stayed above there for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. And then, of course, came down here. And then when it came back up to this line again, that was a great area to short. So, like I said, it looks like it's rolling over here. Nothing is written in stone. We have 4 weeks here that were one time framing lower. So let's take a closer look. Okay, this is the daily chart. Is it going to bounce here or is it going to go lower? I had this Andrews pitchfork here, and you can see that it respected it down here, and that once it got above this median line here, that it kind of just rode it up. And then once it broke through, you had all this volume in here that if there was another test of that area, that was a sweet time to go short. So yes, it did come right back up into this area, and that was a great short there. Okay, let's make some arguments for it to go either higher Monday and Tuesday, or lower. So an argument for it going higher is that we have divergence here, divergence here, divergence here, compared to this. We have divergence in volume. So so this very well could be a low. I'm not saying that this is a major low, and here are a couple of reasons why. Number one, if we looked at the, let me get rid of that. If we looked at the market profile chart, the low here that was made during the regular session hours is a poor low. Generally, poor lows are revisited. So I have no confidence in this low. So I'm not saying that it can't go higher from here. A couple of things that I will be watching. Number one, can we get out of this balance right here? And if we do we just like peak out of it and then come back in? That may be an area where I would like to. I was thinking about going short there, but I'd actually like to see it go higher before I go short. So a couple other areas that it could test is this previous low here, this previous low here. And what I would love to see is for it to come all the way back up to 46. And because number one, 46 is a round number. It's this level of this breakout here. And there is some, a couple days volume in here to reject off of. Let me show you that on a different chart. It's kind of like the setup that we saw on the weekly chart, where you had some volume build up in here, and then it breaks down, and it comes and just tested that volume, that breakdown area again. So on the 30-minute chart, this is where it broke down from. So I would love to see it come all the way back here, maybe in a ABC fashion, but that kind of seems a little far away. The volume for this area here, you can see this is the volume area, so that would be more like this area here. So anywhere in between here, I'd be watching for a reversal. So just as a recap, I don't expect this to be the low. So I expect this to be revisited, whether that's this week or not. Well, that remains to be seen. I kind of see this as a 1, 2, 3, 4, 5, and we're in an ABC correction, and that may not happen until 2019, 2018. Where it actually reaches this low, and that would be down around $10, $10 to $15. Is that possible? I don't know. It seems unlikely, but it certainly seemed unlikely when it was at $147 to reach this trend line again. Okay, some other reactions that we may see. This is the daily chart. I have a Fibonacci retracement tool here, and you can see that once it reached its high, it came back and tested the 38.2 level. That got support there. We're right back at that level again. I'm not confident in this low, so where could it retrace to? It could retrace to the middle portion of this downtrend line. It could retrace all the way to the opposite end of the trend line, and let's say that it doesn't retrace, but it just continues lower, it could retrace to the bottom of this trend line, maybe to the midpoint of this up move, and that would put us down around here. So we could see something like this, and just a temporary bounce. That is if this is truly a 4. So it could be something like this, and since we had support through here, maybe come and test that support again before it falls over. But the market seems to try to make as many people wrong as it can. And so if this begins to look too obvious, like it's going down, maybe we're heading up. And again, this is the breakout point where it broke out from this area down here. So we could find the market, if it is going lower, if it is going to break this low, we may find it temporarily bouncing out of this level before going lower. So bottom line, if we do head higher on Monday, I'm going to be looking for this area to possibly cause resistance, this area here, and of course this line here, and then there's another line I have drawn up here. So if it gets this high here, I'm definitely going to be looking for a reversal. I don't know that I'm going to do anything until I see it reverse. If it heads lower, you know, we're pretty extended down here. I don't know if I'm going to be jumping on that bandwagon or not. So really, I have no plan of getting long. I'd like to see it move higher first, and then maybe if there's a nice reversal there, take it short. If it breaks this low, down here, I may need for it to pull back before getting short. Last but not least, I could be wrong about all of this. If you look down here at Thursday's action, let me see if I can blow this up a little bit. I don't like it, but you know, could this be an island reversal? And you know, we're gonna get a couple legs up before we go down. It's certainly possible. So right now I need more information, and I'm sitting on my hands, and I suggest the same thing. Well, that's what I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis in order to stay disciplined and true to your plan. Hey, I really appreciate your likes and comments and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.